Good morning, it's Monday the 25th of July. Well, we've managed to survive the heatwave so far. So welcome to Atlantic Capital Markets roundup of this week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week. We'll then dive into some of the more important stories afterwards with our own thoughts and analysis. So without further ado, let's get straight to it. So the economic numbers being issued this week start today in Germany with the release of the latest IFO economic sentiment. On Wednesday, the actions in the US with the release of both the latest durable goods figures and of course interest rate decision day. We'll be giving our thoughts on the Fed's position later in today's report. Two key figures coming out on Thursday, inflation in the Eurozone and GDP growth in the US. All eyes on both these figures. And again, we'll be discussing these afterwards. Also in the US on Thursday, the release of the latest initial jobless claims. Similarly, eyes will be on the Eurozone on Friday as they release their latest inflation numbers, as well as the Fed's preferred inflation gauge, the PCE, as that's also released on Friday. Both stories we'll cover towards the end of today's report. And finally, on Friday, the Eurozone also updates us with their GDP growth. And the companies that will be reporting this week are as follows, and they start today with Vodafone and Ryanair. On Tuesday, Microsoft released their Q4s, which we'll discuss straight after this. Also on Tuesday, Alphabet, Visa and Unilever. It's a week of UK bank reporting this week, starting with Lloyds on Wednesday, reporting their second quarter results, which again we'll take a look at in more detail afterwards. Also on Wednesday, we'll hear from Rio Tinto, Wizz Air, Meta and Boeing and Ford. And the next bank in line this week is Barclays, who also report half-yearlies on Thursday. Oil giant Shell are also due to report their Q2s, and electronics giant Apple report their Q3s on Thursday. And we'll discuss all three of these in more detail shortly. Also on Thursday, it's the turn of BT Group, ITV and Amazon. And finally on Friday, the last of this week's banks, NatWest, reports, as well as IAG and ExxonMobil. Well, last week, the ECB surprised the market and hiked rates by 50 basis points. This week, it's the Fed's turn. Expectations are for a 75 basis points rate hike. The real question is, could they hike by 100 basis points? In addition to the Fed, earnings season ramps up dramatically on both sides of the Atlantic, with UK banks and US big tech companies due to report. Will they disappoint? Well, let's take a look at these key stories in detail with our thoughts. Microsoft are due to release their Q4s after the close on Tuesday. Well, the company is expected to grow revenue and earnings when it reports thanks to solid demand for its digital products and service. And despite tough comparisons from last year and a strong US dollar. Cloud computing expected to drive growth as companies continue to upgrade infrastructure. The outlook statement will be a crucial area to watch after the company recently spoke of the challenges of the tight labour market and the increase in staffing costs, which could be permanent. Any comments on its takeover of Activation Blizzard will also be watched closely given how much gaming is a growth opportunity. Lloyds is due to report second quarter results before the market opens on Wednesday and will be watched closely given that it's often considered a barometer for the health of the UK economy, as its revenues mainly from retail and business banking and through Halifax, the UK's largest mortgage provider. Well, the results come as the share price trades down around 14% year to date. The bank's, however, expected to continue growing its revenue thanks to rising interest rates, boosting net interest income, expected to be 2.7%. However, the mortgage business could see growth slow as higher rates dampen the housing market. EPS expected to fall as costs rise and provisions for bad loans increase. The Fed Reserve is expected to raise interest rates again at the July meeting on Wednesday, and according to a Reuters poll, 98 out of 102 economists expect a 75 basis point hike, as policymakers continue to fight against 40-year high inflation. The market's pared back bets that the Fed would act more forcefully and go for a 100 basis points hike. However, the big question is, what can we expect for September? Will policymakers guide for a 50 basis point or 75 point rate hike? US CPI inflation rose to 9.1% in June, above forecasts of 8.8%, suggesting the Fed is behind the curve. So do keep an eye this week on the US dollar and US indices. Barclays released half-year results on Thursday. Well, the bank's share price hit the highest level since 2018, earlier this year, but has since eased lower, falling to a one-year low in April as investor concerns ramp up. When Barclays reported Q1 earnings, the bank was facing a challenging outlook, owing to the deteriorating macro picture. But there were also growing questions over the competency of CEO Venkatakrishnan following an SEC investigation which revealed that the bank sold billions more in structured products in the US than it was actually allowed to sell. Barclays have set aside £540 million to settle that matter. Last quarter total revenue growth of 10% offset higher costs, and despite the rise in the cost of living crisis, there was still little evidence of an increase in bad loans. US banks have suspended buybacks, instead setting aside more in bad loans, while also battling against a fall in investment banking fees. And also on Thursday, Apple will be reporting Q3 earnings after the close. Well, the numbers come after the tech giant caught the market off guard by announcing plans to slow hiring and spending next year, as it prepares for a slower economic growth and rising uncertainty amid supply chain issues and, of course, COVID factory shutdowns in April, which Apple said could cost it as much as $8 billion in Q3. Apple has once again declined to offer guidance for the coming quarter, although revenue is estimated to come in at $83 billion and profits of $1.15 billion per share. And finally on Thursday, oil giant Shell are due to release their Q2s. Rising oil and gas prices have meant that oil majors and more broadly the energy sector has outperformed so far this year. Surging revenue and profits have led the UK government to impose a windfall tax. Even so, solid Q1s lifted the company's share price to a two-year high in May, although the share price has since slipped back as oil prices have fallen. In Q1, underlying profits jumped 43% quarter on quarter, smashing the forecast of $8.2 billion, marking its best quarterly performance in over a decade. This quarter, Shell's expected to report a 60% rise in revenue and a rise in basic EPS to $1.39. The oil major also expected to outline plans for a share buyback after its last programme came to an end earlier this month. Shell could return $6 billion in H2 based on its current plan to return 30% of operating cash flow. The Eurozone is due to release its latest inflation figures at the end of this week. The Eurozone recorded record inflation of 8.6% year-on-year in June, expected to top that in July at 8.8% as food and energy prices continue to rise. Of course, piling pressure on the ECB to hike rates again when they meet in September. Well, the central bank raised rates for the first time in 11 years last week, surprising the market with a 50 basis point hike. However, the move comes as economic growth is slowing. Preliminary Q2 GDP data, also due this week, will of course shed light on how the economy is holding up as inflation surges and consumer confidence tumbles. PMIs have been showing a marked slowdown in growth, which doesn't bode well for GDP. And finally, the Fed's preferred inflation gauge, the Personal Consumption Expenditure Index, the PCE, is due to be released on Friday and is expected to show that core PCE ticked higher again in June to 4.8%, up from 4.7%, defying calls that the US has reached peak inflation. As inflation continues to rise, GDP data, which will be released on Tuesday, will shed some light on the economy's strength in light of increasing prices. US GDP contracted by 1.6% annually in Q1, and the contraction isn't expected to be repeated in Q2. Instead, the economy in the US is expected to have rebounded in Q2 by 0.5%. So those are the big stories of the week. Let's wrap up with a quick look at the dividend announcements due this week. Well, in the FTSE 100, we'll hear from SSE. And in the FTSE 250, it's the turn of Vivo Energy, Royal Mail, Kinetic Group, Monks Investment, Bankers Investment Trust, NB Private Equity Partners and MoneySupermarket.com. So there you have it, it's a week of key economic flags from the market. The banks through to inflation and GDP figures. Will those flags be green or will they be red? Have we seen peak inflation yet or not? So many questions, but as always we're here to at least provide some of the answers. So as always, thanks for watching. Don't forget to click on that subscribe button to make sure that you don't miss out on our regular financial updates with our expert market analysis and of course our opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you do want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.